Welcome back. You have tuned into Market Fatafat show where we tell you all the stocks that are buzzing in trade. We have our expert onto the technical side, and we also have a team of researchers with us. And moving on to the next stock that we're going to be highlighting. But before that, let me welcome on board Kunal Rambhia onto the technicals. And Kunal, very good afternoon to you. And coming to you for your first stock, that is HAL. Tell us how are the charts looking like for this one and next stops for this as well.
Very good afternoon to everyone. So HAL had a we saw the dream run on the counter from extreme low levels of around 2200 to 4000 levels. And now if you watch out the counter, it's been almost 3 months the counter is in sideways consolidation since June. And now the bottom seems to be in place for now. So the support level which is highlighted on the HAL chart is around 2830 to 2840. 3730 to 3740. Keeping that as a stop loss, one can start accumulating. I think the next new rally is about to emerge on the same. The levels to watch out will be 4,200 to 4,300.
4,200 to 4,300 could be the next stocks for HAL. But with this, let's move on and let's highlight Nitin Spinners for you this time around. From the earnings perspective, not a great set by the company because on all the parameters, we have seen a decline coming in where the revenue has seen a drop of 13%, while the profit of the company has fallen by 56%, and now the net profit in the bottom line stands at 29 crores. But talking about the EBITDA, that has also seen a fall of 30%. But on to the stock, if you will see, the stock is holding up a gains of 2.5% because the key to watch is the margin figure, which has now come out at 12.3%. Yes, definitely on a YY basis there's a decline of 304%, but the key to note is that for the past 3 quarters the company has been reporting an EBITDA margin of 11%, and post that in the first quarter of FY24 the margins have seen an improvement of 130 basis points, and maybe that is something that the street is liking, and on the back of the earnings, the stock is seeing a decent gains right now.
All right, let's talk about Bank of Baroda then, and that one also is in focus on back of the earnings. If you look at the numbers, if you see the NII is coming higher by about 24% on a year-on-year basis. The operating profit also, or rather the PPOP, also has seen a good uptick on a year-on-year basis. If you look at the PPOP, it's coming higher by about 72.8% on a year-on-year basis. The gross NPAs also have been pretty much stable, in fact rather improved on a quarter-on-quarter basis. If you look at the net NPA, it's coming at around 0.78% as against a net NPA of around 0.89% a quarter ago. If you look at the gross NPA, also good reduction in that one, 3.51% versus 3.79% in a quarter ago. But if you look at the stock today, under pressure with the rest of the PSU banking space, if you can see Bank of Baroda on your screen, now trading lower by about 0.7%.
Okay, Kunal, coming to you for the next counter then, and Indus Towers is the one that you have picked up. Tell us how the chart's looking like for Indus Towers, and what are the next levels that one should be watching out for?
So we have been discussing about Indus Towers now since I think around 2 weeks. The only reason for me to shortlist this counter is there is a positive channel formation on the daily chart, and counter just perfectly took the support of 170, and from there we have seen a decent bounce. Intraday charts are suggesting inverse head and shoulder. The breakout is placed at 175, which is the current market price itself. So if today's day, if the counter closes near to high of the day and closes a bit higher than 175, one can initiate a buy. Keeping the stop loss of 170, one can expect the target of around 190 to 195.
All right, moving on, Ankita, let's talk about ABFRL. This one has always been on the list of a lot of technical analysts. You had the numbers, disappointing numbers coming in for ABFRL, but today it's also under pressure. But today it's not on back of earnings. What is it?
Cheryl, it is on the back of a note that Morgan Stanley came out with, and they are maintaining an underweight position on ABFRL, and they have set the target price to 176 rupees per share. Now, according to them, the Q1 earnings have missed their estimates and consensus, and they feel that the top line growth has been affected by the softness in the discretionary demand, and also much fewer weddings. Also, the management feels that the demand recovery will take place closer to the festive season in Q3. And that's the word that's coming in from Morgan Stanley as well, and they're maintaining an underweight on the stock, and on the back of that the stock is down more than 4.5% in trade today.
Okay, but moving on to another result candidate, Usha Martin. The stock is seeing a good gains in today's trading session and a good gains on a financials perspective as well on a YY basis, where the revenue has seen a jump of 7.3%, while the net profit has now zoomed to over 100 crores this time, and that's a jump of 23% on a YY basis. And there has been an improvement on the margin figure as well, 240 basis points, an uptick coming in, wherein from 15.5% last year, this time the margins have come in at 17.9%, almost close to that 18% margin number. So on all back of the earnings, we are seeing Usha Martin gaining in trade today and holding a gains of over 2% currently.
All right, moving on then. Shesha, Naveen Fluorine, why is this one in focus today?
Yes, the counter is in focus, and that is because the company has received notice from Gujarat Pollution Control Board for closure of one of their plants in Dahej. The company has said that the closure is due to violations regarding air pollution norms, and they have also demanded 1 crore as penalty in environmental damages compensation. So negative news coming in, because of which the stock is reacting negatively. It has reversed its losses. It has recovered from the lowest point of the day, now sitting with a cut of nearly 2%. On the back of this news, we also have a note that came in from Centrum, where they say that the Dahej plant remains the growth engine for the company. Closure is certainly expected to impact the first quarter results. They also say that if the plant is closed for 15 days and if the lost production is not recouped, the loss could, the financial impact from the plant closures could stand at about 40 to 50 crores. So definitely a negative news that has come in, where the company has received plant closure notice from Gujarat Pollution Control Board, and the stock as a result of which is declining in trade today.
Okay, moving on, and Kunal, coming to you for IEX. The company also came out with its operational updates. This time the overall revenue has seen a jump of, volumes have seen a jump of 19%, while the profit has seen a fall of 16% on a YY basis. And clearly onto the charts, we have seen pressure building up for quite some while now on IEX. Tell us what could be the next stops for this.
Observation here on the chart is that since 9th of June, the day when we saw a gap down opening and the counter was down by around 10%, this counter has been in a sideways consolidation. And if you look at the levels, the resistance is at around 130 levels, and the support is near to 122, and it's been a broader consolidation recently. The way it has come up, the volume activities are showing a good accumulation happening on the chart. So it's a conditional call, and that is that once the counter crosses 130, one can definitely initiate a buy. The stop loss on that case will be 127, and I'm looking out for the complete turnaround story. The first target will be around 142 to 143. But mind you, again, we will be initiating a buy only on the breakout of 130 levels.
All right, moving on, let's talk about Cipla then. And this particular stock is in focus because no doubt we have that news where the promoter is going to be selling stake, is what sources have told. And also we've got some names from ET Now sources that there could be sovereign funds also likely interested in this particular stock, and that's why they marked recovery in Cipla. But there's another news piece surrounding Cipla, and that is the US FDA has completed an inspection of their Pithampur manufacturing facility, and the inspection, post the inspection, the classification of the plant is now official action indicated, because the establishment has not met regulatory requirements and may be subject to further regulatory action, is what Cipla informed the exchanges. They said the this official action indicated, or OAI, status may cause delay or withholding of pending product approvals. So on back of that, you have Cipla that is in focus in today's trading session.
Okay, moving on, there are a lot of IT names that are on technical analyst radars, and Kunal, Emphasis is the counter that you are picking up. Tell us how the chart's looking like for this one.
So yes, we really saw a decent rally in the IT segment, the entire IT segment, right from the extreme low levels of those April and May. The interesting observation on Emphasis is that if you look at the last 6 to 7 months chart, it was in a broader consolidation, and the resistance was at around 2290 to 2300. Off lately, it is now forming the the flag formation on the daily chart. The breakout is placed at 2300, which is the current level itself. And today in the trade, it's gaining a lot of momentum also. Watch out for this breakout of 2300, stop loss being 2200. One can expect the target of 2500 to 2550, though it's a trading call. But I'll keep repeating this on regular shows so as to trail the stop loss and hold the position for complete turnaround story.
Okay, trail the stop loss and hold it for a complete turnaround. But moving on, let's shift focus to MapmyIndia. This particular counter on focus on the back of the earnings, and the stock price today will clearly tell you how the numbers were, because on a quarter-on-quarter basis we have seen a jump across the parameters. The revenue has seen a jump of 23% quarter-on-quarter. The net profit has now zoomed to 32 crores, and that's a jump of 13% on a sequential basis. And if you look at the EBITDA margin, that has also seen a jump of 181 basis point. Other than that, there's a new appointment where the company has appointed Mr. Rohan Verma as the executive director of the company with effect from 1st April 2024. And on the back of all these news flow, the stock is zooming in trade today and holding a gains of nearly 4% right now.
All right, let's talk about IDBI Bank then, Kunal, and how are the charts for this one looking like, because this one is a divestment candidate, a lot of news flow surrounding this particular counter, and that also is one of the reasons the way how the stock reacts or moves. But on the charts, what is the indication that you're getting for IDBI Bank now?
So here the specific observation is that this IDBI Bank has been in the complete downtrend since 2011-2012. It's the first instance where the counter is coming out of that entire negative trend. The first breakout was at 60 levels. Now if you look at the last 4 years charts, from 2018 so far, counter tested the level of 64.5, 65 almost 5 times, and this is the 5th time where it is attempting the same level. It's trading right now at 64.5, 65. I'm just waiting for the weekly closing above 65. One can start accumulating those counter in the zone of 65 to 60. Stop loss will be a positional stop loss, which is at around 51, and I foresee the levels of 85 going forward. It's a positional trade. One can plan accordingly, but the first now new breakout is placed at 65. So for the momentum trader, we'll have to wait for the breakout of 65.
Moving on then, Ankita, coming to you for Piramal Pharma. This particular counter is seeing quite a muted trading session, but Jefferies has a view on this one. Tell us what Jefferies is highlighting.
That's correct, Shrishti. Rather muted the trading session, but there's a note that came out by Jefferies, and they are maintaining a buy on the counter, and they've hiked the target price to 125 rupees per share from 115 rupees per share. Now they feel that the quarter one has been missed due to higher OPEX for the company, but complex hospital generics grew a good 21% on a year-on-year basis, and they remain bullish on that particular division. Also, they expect mid-teens growth for hospital generics, and the CDMO's commentary was very encouraging, and on the back of that, Jefferies has maintained a buy on the counter and also hiked the target price.
All right, moving on then, Shesha, let's talk about Global Spirits and Gulshan Poly as well as BCL. All of these counters, I believe, are in focus on back of one news peg, isn't it?
Yes, they are in focus in the back of one news peg. So grain ethanol producers like the counters that you mentioned are in focus, and that is because oil marketing companies have gone ahead and hiked prices of ethanol that is made from maize and broken rice. Just to give you some context, it was on the 26th of July when FCI, or the Food Corporation of India, suspended supplies of rice to these companies for ethanol production. These companies came ahead and clarified that this is a temporary blip and that they are resorting to other sources of raw materials in order to produce ethanol. Now OMCs have gone ahead and hiked prices of ethanol. So ethanol that is produced from maize, the prices of that have been hiked by about 6.01 rupees per litre, and for ethanol that is produced from damaged food grain or broken rice, prices of this have been hiked by 4.75 rupees per litre. So a big positive that is coming from for these counters, BCL Industries and Global Spirits, as we speak, are gaining over 4 and 6% respectively.
Okay, so from ethanol, let's shift focus to the sugar space. And Kunal, coming to you for next one. Shree Renuka Sugar is the counter that you have picked up. Tell us how the chart's looking like for this one.
Again, so this is a counter which we are discussing second time. The first breakout was at around 45. Counter went up to 47.5, retested the breakout, and now back to 47.5. So seems to be a perfect consolidation, breakout, retesting done on the technical front. So now from here on, one can start accumulating the counter from the present level to the downside of 45. Positional stop loss is 43. And now we can place the target on the higher side, which are till 55 levels. Again, it's a positional trade, so one can trade accordingly.
All right, moving on, let's talk about Hikal or Hikal as we know it. This particular counter was seeing an uptick in earlier on in today's trading session. And this after you had the Gujarat Pollution Control Board revoked a closure order on its Panoli facility. Remember, on July 23rd, the Gujarat Pollution Control Board had actually directed the company to cease operations of its plants located at Panoli district in Bharuch, and this is within 15 days of the order. This for alleged violation of certain provisions of Enforcement Protection Act. Also, post that, the company has clarified on all the queries that were raised by the Gujarat Pollution Control Board, and post that they've come out with an order where they've allowed the company, or they've revoked the closure order. And on back of that, you had Hikal that was actually gaining in trade. It was trading higher by about 2% on an intraday basis. Now it's given up most of its gains.
Okay, but moving on, let's shift focus to Voltas now. And Kunal, onto the charts, what we see that the stock is seen to be recovering all its 6 months losses which it registered, and also on a YTD basis, no significant up move. But in the past 2 to 3 days, the stock is seeing good gains. So now is the tide turning for Voltas? How are the charts looking like?
Absolutely, seems very much likely, and the reason for me to shortlist this counter is that on the weekly chart, if you notice, this counter made almost double bottom. The first bottom was somewhere in the month of Jan 2023, where the lows were 735, and recently, that's in July 23, again it made the almost similar bottom. So that's a double bottom candidate right now. If I look at the last 65 weeks consolidation, that entire negative downtrend is coming to an end. So I have shortlisted this counter again on a conditional note. That is that this counter should close about 830 to 835 mark and should sustain for at least a couple of days. If that happens, this entire sideways consolidation with negative bias may come to an end, and we may see a new rally emerging from the present levels. So the levels to watch out will be 830 as a breakout, and post breakout the target being at least 930 to 935 with the stop loss of 790.
Additional buy coming in on Voltas, but let's shift focus to India Cements then, and that stock is seen to be drifting lower on the back of the earnings, where the financials were already weak because same quarter last year the company reported a margins of 2.53%, but now that has sunk to 0.6% only. And other than that, the revenue has seen a decline of 5% on a YOY basis. The company has registered a loss of 87 crores versus a profit of 80 crores in the same quarter last year. So complete turnaround onto the negative side is what we have seen coming in for India Cements, and also the EBITDA is down 79% on the back of the earnings. We are seeing the stock is seeing a decline of 4% currently.
All right, moving on now, Kunal, let's talk about Bajaj Finance and how is the chart looking for this major?
So we saw a massive gap up opening on 4th July. If you notice, the counter made a high of around 7,920, and since then it's in the downtrend. It's making lower top lower bottom formation. Finally, it has reached at the level which is a make or break level in technicals. Reason being, there were multiple supports near to 7,000 to 7,025 mark. It retested that zone just a couple of days back and now hovering near to those levels. By any chance, if the counter fails to sustain above this level, then I'm foreseeing the levels of 6,500 on the charts. And if it maintains this level and bounces above 7,175, then we may expect the 7,600 mark coming in. So it's a conditional call again. Watch out for two levels. First is 7,025 as a support and 7,175 as a resistance. And wait for the directional move beyond or below those two levels which are mentioned.
Okay, Ankita, coming to you for the next counter. You have picked up Lupin and post the earnings con call. The company, the brokerages have come up with their notes. Tell us, what are they highlighting?
That's correct, Shrishti. Brokerage notes have come out for this particular counter, Lupin, and it is up 1.3% in trade today. And a note by Jefferies has maintained an underperformance on the stock, and they have hiked the target price to 810 rupees per share from 660 rupees per share. And according to them, the quarter one has been a beat on all fronts, and all eyes will be on the Spiriva launch, and that is something that they are watching out for. And they've also hiked the FY24-26 estimated EPS by 25 to 58%, giving benefit of doubt on the base business recovery. They've also, ex of Spiriva, they are expecting Lupin, that is actually trading at a very expensive PE valuation, is what Jefferies is saying. And on the back of that, they are maintaining an underperform, and they've also hiked the target price to 810 rupees for the particular counter.
All right, that is Lupin for you. But Kunal, BHEL, how is this cap goods major looking to you on the charts? Yes, so there was a time when BHEL was doing absolutely nothing years after years, and then you saw a good steady pickup in BHEL in line with what the rest of the other cap good majors were doing. But now BHEL also seems to find favor in a lot of technical analysts. 26% uptick in the last 6 months. You are expecting some more upside, or do you think now it will take a pause?
So we had initiated a recommendation on this counter near to this around 92-93 mark, and with the target of 105. And if you can just recall, we had discussed the same counter last week also, saying it's the time to book out for now. Now, opposed the results, we saw a massive decline in today's trade. Today it's down by around 2.5-3%. It's reaching near to that breakout zone of 94 again. So now I'm shortlisting this counter, though I'm not initiating a buy as of now. I'm just waiting for the counter to correct little more. Near to 94, one can definitely think of accumulating this. Weekly charts are really strong. Think of buying near to 94 with the stop loss of 90, and then we may expect the rally to continue again.
Okay, moving on then, and Ashesha, Ethos is the counter that you have picked up. Tell us what's the news flow in this one.
One is in focus on the back of its results. Very strong set of numbers. The stock, in fact, at all-time high in today's trading session. Now is off the highest point of the day, but at one point in time, the stock was gaining as much as 10%. Even now, as we speak, 9.3% higher in trade. Revenues for the quarter gone by stood at 230 crores, which is an uptick of a whopping 33% on a year-on-year basis. Company reported strong revenue growth on account of strong traction in both offline as well as online channels. As far as other numbers are concerned, margins came in at 14.7%, marginal contraction from 15.6% that the company reported same time last year. Net profit, meanwhile, came in at 18.2 crores versus 12.2 crores the company reported same time last year, indicating an expansion of nearly 42% on a year-on-year basis. Very strong set of numbers is what the stock is reacting to. 9.3% higher in trade for Ethos.
All right, that is Ethos for you, but let's talk about Aurobindo Pharma, and this one actually hit a 2-year high in today's trading session. Not just that, Aurobindo Pharma also has seen an up to as much as 100% in the year 2023, and this is today's move in Aurobindo Pharma is coming after its unit UGR got a final approval from US FDA to manufacture as well as market vancomycin hydrochloride for injection, which is used for the treatment of skin and bone infection. Not just that, if you look at the further development on that particular order or rather that particular drug approval, the product is likely to be launched in this month alone, and the approved product has an estimated market size of around $34.4 million for 12 months ending May 2023. This is some of the reports that are citing. So yes, a good, a very key drug getting an approval from US FDA, and you can see the stock 2.5% uptick coming in at a 2-year high. That's Aurobindo Pharma for you.
Okay, moving on, and let's get you some news wherein all marketing PSUs will soon get rupees 30,000 crores of financial support, wherein ET now has learned from the sources that Finance Ministry is evaluating the proposal as announced in the budget for green projects. Prakash Priyadarshi has more details on this one. Take it away, Prakash.